Now we're kind of getting to COVID. We're only 40 minutes in, but and I'll move through these rather quickly. Of course, everyone watches the news. We know that it was declared a pandemic on March 11th. Some of the issues, the incubation periods were, how was it spread, caused a lot of concern, and we know some of the symptoms there. So I won't go directly into that, but we had some really exponential growth rates for cases and death, and caused the entire global economy to go into a pace of decline. So therefore impacting the insurance marketplace. We'll go to the next slide, Melissa. So on the property market COVID-19 update, we're seeing that some of the underwriters and their engineering folks and their risk control folks are unable to access these potential properties to do inspections, causing issues as far as either renewing coverage or renewing coverage at a competitive rate. So we're asking for a lot of these to either have, subjectivities upon renewal. And so we're trying to figure out, what is best and what can be the best thing moving forward for those that are not able to be inspected. There's increased concerns over, vacant locations. It's not really, again, an issue here with people mainly working from home or being told to shelter in place for a time being. But if you have a clubhouse that's vacant or been shut down, checking those can be an issue for insurers when they're not sure that it's being monitored for heat, cooling, busted pipes, water leakage, things of that nature moving forward. Or if you have a pool, is it being is it operable or is it being monitored or protected therefore? So let's move to the next slide. So, and now Bill, if you're on and you want to jump in with us as well on some of this, but just considerations around your property. Is there actual physical damage? Here's some of the considerations related to COVID-19. Is it a covered peril? Does the policy provide any coverage for non-physical damage or special peril, business interruption, site-specific infectious disease exclusions, and civil authority coverage normally requires a covered peril. So the issue is that with these property coverage forms, you have to have a trigger or a type of cause a direct loss to have coverage, and there is no direct loss due to the nature of this type of thing being an exclusion. So again, property coverage has been minimal at the moment, and the good news is that the associations and that the organizations aren't experiencing business interruption, so to speak. People are still able to access their homes and do different things, so we're not having any kind of issue with unable to access and causing downturns in profitability. We can move to the next slide. So back to liability. This one is really highly dependent again on the coverage, on the insurance company, on the forms, on the exclusions, terms and conditions, as we like to say, and then of course the state laws. We see a lot of these different exclusions are being placed on a challenge around procuring coverage if in fact a third party has a claim for communicable disease or viruses, fungi, bacteria exclusions, pathogens, things of that nature. We're seeing a lot of these different pollution exclusions come into play as far as affording coverage. So every policy, technically, I would suggest every policy needs to be reviewed. There's no blanket statement, yes, there's no coverage, or no, there is coverage. You need to review those as you move forward. And you have to comply with all the policy conditions in order for a claim to avoid any contract breaches or to be deemed a denial of coverage. Let's see here. Non-ODA exposures may be rising due to people utilizing those for deliveries and things of that nature. Again, doesn't really apply here as much. All these, I think, at the bottom, we really shouldn't have to deal with as we go forward. So let's go ahead and move to the next slide, Melissa. So again, D&O has become a really talking point. COVID-19 versus pre-COVID. The firming continues. We've talked about that. Under pressure, there's targeted segments, insurance companies, real estate has become a large targeted one, as well as retailers seeing heightened pressures. So the good news is on the renewal, and Art, I may throw this over to you as well to ask you kind of your thoughts around some of the carriers, is carriers have not pulled or quoted, bound terms or adjusted in certain targeted segments. So once they've made their mind up, they've not pulled back terms of the quotes. They're just either adding extensions on or putting different kind of exclusions or endorsements on those different things. Really, when you fill out the applications for renewal or new business placement, they're going to probably be some COVID-19 now crafted or related questions on these as you move forward to procure coverage. We're not seeing those exclusions yet for COVID-19, but we are seeing some things due to insolvency and other things on the private D&O market, which would be where this applied. And let's move on to the next slide. So this just shows you right now, breakdown by type of carrier. We have a lot of circumstantial notices, 89%. So far on the financial management liability type tracking for COVID-19, only 11% have resulted in claims. So that's promising for insurance companies, but not as promising if you do in fact have a claim and need to recoup remuneration for the third party. Again, as you'll see there on the top right side, D&O, the most affected line of coverage moving forward for COVID-19 type claims. Go to the next slide. Let's see. So with cyber, no current changes. We've seen an appetite yet. No new exclusions. These are all positives. No change in the rate due to COVID-19. We were already seeing a little bit of a 5 to 10%. So again, with people working from home, it's becoming more of a watch and wait situation for underwriters, and maybe some scrutiny on some bodily injury type carbacks or any large systemic breaches will have an impact on your specific exposure to your association. Go to the next slide. Construction, so if there's any kind of heavy maintenance or you're building new facilities, things of that nature, construction capacity has not really materially changed. We've seen construction be able to continue, not as an exposed, construction is done outside. We all know these things, common sense. So many of these have been able to continue work as long as this is taking place and not seeing claims come out of those at the moment. So that's a positive for any kind of new construction or renovation. Go to the next slide, please. Environmental, we're seeing a lot of the claims be turned over to environmental, and if any coverage is highly dependent on all of this on the specifics of each insured's policy terms. We want to make sure that we have some kind of bacteria and or virus exist. We have been able to see the disinfection, cleanup costs, some remediation has afforded some sublimit coverages in certain policies. So you may look to your current coverages to find those types of payouts for cleanup, making sure the place is clean and done the right things, social distancing, highly hygienic. Those things will help as far as if you can remunerate some coverages back. It's a consistent approach across their entire book of claims for carriers. They're not going to have account-specific changes, is what we like to say, so that one form will stand for different associations. We can go to the next slide. So, and Art, I'd like to probably turn this one over to you if you'd like to talk a little bit as we assist, the associations and heritage and the clients with moving and getting renewals put in place for this 2020 year. The good news is if you renewed your coverages before about March 15th, you probably were getting pretty good terms, or even April 1st. Now moving forward, COVID-19 has become a common underwriting term and a common question you'll see. So Art, why don't I let you talk through this slide a little bit about what will be proactive and what you're seeing a lot of underwriters ask for the 2020 updates.
Yeah, and as you mentioned earlier, property rates have been going up, pre-COVID, and if anything, with reconstruction costs and all the natural disaster that they've incurred, it was bound to happen. So, we haven't seen as much on the property side to say that it's necessarily COVID affected, but underwriters are definitely starting to ask that question. I would say, and as you mentioned, D&O and EPL and some of those other lines, the underwriters are actively trying to mitigate that now, and so asking questions. Have you had anything related to COVID as far as claims or litigation? If you're a business, have you had layoffs? So that's something that's definitely coming into play. And the best way to deal with upcoming rate increases or any kind of difficulty in underwriting, whether it's COVID related or not, is really to just get ahead of it. So, like you mentioned, don't skimp on renewal strategy meetings. Definitely get ahead of that. Meet with your property manager, your broker, your underwriter, and start really addressing if you have any changes and what you're doing to mitigate any loss that could arise from COVID-19. So, in my opinion, it's just about preparedness and understanding that the market is changing a little bit. We're still all trying to figure out how, and these are all great predictions and likely accurate. But it's, as you mentioned, it's important to just get ahead of it and figure out what you will do if there's any risk involved there.
All right, great. Well, I appreciate that. Thank you, Art. I appreciate you adding that back in. That kind of, again, you've seeing the same things we are from your place of placement and brokerage as well. The silver lining on some of this stuff is that, of course, auto losses have been down due to less people on the road, and then of course the courts have been closed, so delayed a lot of civil litigation, and some of this may improve settlements as they're not having as people are having a little more goodwill going into this than we've seen in the past, which is positive, showing for our social humanity here. So let's move to the next slide. So I'd like to turn this one over to Bill, and Bill, I may have gone over a little bit, but maybe talk about some of the proactive things that we're seeing, or we can open up for questions, Bliss, however you want to do that, and kind of talk through the best strategies. I don't, this should be the end of the presentation. We appreciate everybody's time to talk about what's COVID done to the property and casualty marketplace, but now we can talk a little more of the loss recovery and some proactive things. I do see a couple of questions here relating to clubhouses and pools and certifications with lifeguards, so that's something we can dig into.